Question 1. Topic: Insurance market practices. Which of the following practices is considered an unfair trade practice under South Dakota insurance law? A. Offering a discount to a long-term customer without notifying the insurance department. B. Misrepresenting the benefits of a policy to persuade a customer to switch insurers. C. Providing accurate information about policy exclusions during the sale process. D. Requiring a medical exam for life insurance applicants to determine risk level. Answer: B. Misrepresenting the benefits of a policy to persuade a customer to switch insurers. Explanation: under South Dakota law, misrepresentation is considered an unfair trade practice. According to SDCAS 58335, it is illegal for an insurance producer to make false or misleading statements about policy benefits or terms to induce customer to switch insurance providers. This behavior is considered deceptive and under consumer trust. Option A. Offering discount to long-term customer without notifying the insurance department may be breach of pricing regulations, but it is not inherently classified as an unfair trade practice. Option C. Providing accurate information about policy exclusions is required ethical practice and not violation. Option D. Requiring medical exam is standard underwriting process and does not constitute an unfair trade practice. Question 2. Scenario-based question. Topic: Insurance contracts. Jessica, an insurance producer in South Dakota, is helping a client, Mr. Harrison, purchase a homeowner's insurance policy. During the application process, Mr. Harrison asks Jessica if his policy will cover damage caused by flooding. Jessica, knowing that standard homeowners policies do not cover flood damage, tells Mr. Harrison that flood damage is covered without any additional endorsement. Later, a flood damages Mr. Harrison's home and his claim is denied. What is Jessica's most significant legal violation in this situation? A. Failure to provide written copy of the policy exclusions. B. Providing inaccurate information about policy coverages, constituting misrepresentation. C. Not offering flood insurance as separate policy option. D. Failing to confirm Mr. Harrison's understanding of his policy before issuing it. Answer: B. Providing inaccurate information about policy coverages, constituting misrepresentation. Explanation: Jessica's statement that flood damage is covered by standard homeowners policy constitutes misrepresentation, which is violation of SDCAS 58338. Insurance producers must clearly communicate what is and is not covered under policy to prevent customer misunderstandings. Misrepresentation can result in penalty, including license suspension or revocation. Option A. While policy exclusions must be provided, failure to do so would not be the most significant violation in this case. Option C. Insurance producers are encouraged to offer relevant additional policies, such as flood insurance, but it is not mandatory unless the customer specifically inquires about it. Option D. Confirming the customer's understanding is good practice, but the primary violation is the misrepresentation. Question 3. Topic: Insurance financial regulation. Which of the following scenarios would most likely trigger regulatory intervention by the South Dakota Division of Insurance due to concerns about an insurer's solvency? A. An insurer maintains higher loss ratio than its competitors. B. An insurer delays reporting its financial statements by 1 month. C. An insurer's liabilities significantly exceed its assets over a sustained period. D. An insurer increases premiums for high-risk customers to cover potential losses. Answer: C. An insurer's liabilities significantly exceed its assets over a sustained period. Explanation: Regulatory intervention is most likely when there are concerns about an insurer's solvency. If an insurer's liabilities exceed its assets for an extended period, it raises questions about the insurer's ability to meet its financial obligations. According to SDCSS 58448, the South Dakota Division of Insurance insurers to ensure they maintain sufficient capital and surplus to remain solvent. Option A. Higher loss ratio can indicate financial concerns, but does not automatically trigger regulatory intervention unless it is extreme and prolonged. Option B. While reporting delays are problematic, 1 month delay would not typically prompt immediate regulatory action. Option D. Adjusting premiums to reflect risk is normal part of underwriting and is not regulatory concern unless it involves unfair discrimination. Question 4. Topic: Ethical and professional standards. An insurance producer in South Dakota receives a large gift from a client in appreciation for a successful claim settlement. Which of the following actions would best align with ethical guidelines for insurance professionals? They'd accept the gift without informing their agency as it is a personal matter. B. Politely decline the gift to avoid a potential conflict of interest. C. Accept the gift and report it to the South Dakota Division of Insurance. D. Accept the gift and offer the client a discount on their next premium payment as a thank you. Answer: B. Politely decline the gift to avoid a potential conflict of interest. Explanation: under South Dakota's ethical guidelines for insurance professionals, accepting gifts from clients can create conflict of interest and violate fiduciary duties. Insurance producers must maintain professional boundaries to ensure unbiased service. The National Association of Insurance Commissioners (NAIC) model regulations adopted by South Dakota stress producers must act in the best interest of the client without undue influence. Option A. Accepting the gift without agency knowledge can lead to disciplinary action. Option C. Reporting the gift to the Division of Insurance is not standard requirement. Option D. Offering discount is not permitted without insurer authorization and can be viewed as rebating, which is illegal. Question 5. Topic: Insurance products and coverages. Which of the following perils is most likely excluded from coverage under a standard South Dakota homeowners insurance policy? A. Fire damage. B. Windstorm damage. C. Flood damage. D. Theft of personal property. Answer: C. Flood damage. Explanation: a standard homeowners insurance policy does not cover flood damage. To protect against this peril, homeowners must purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP) or a private insurer. This exclusion is standard across the insurance industry and is highlighted in South Dakota insurance regulations. Option A. Fire damage is typically covered under standard policies. Option B. Windstorm damages, a covered peril. Option D. Theft of personal property is generally included in homeowners policies. Question 6. Scenario-based question. Topic: Insurance claims handling. Tom is a claims adjuster in South Dakota handling a car accident claim. The claimant, Sarah, reports that the other driver was at fault. However, Tom receives conflicting statements from witnesses. After investigating, Tom concludes that Sarah is partially at fault for the accident. What should Tom do according to South Dakota's claims handling regulations? A. Deny the claim entirely since Sarah is partially at fault. B. Pay the full claim amount and address fault disputes later. C. Apply South Dakota's comparative negligence rule and adjust the claim accordingly. D. Request Sarah to withdraw a claim due to the conflicting evidence. Answer: C. Apply South Dakota's comparative negligence rule and adjust the claim accordingly. Explanation: South Dakota follows the comparative negligence doctrine SDCOS 2092, which reduces claimants' recovery based on their percentage of fault. Tom must calculate Sarah's compensation by reducing the settlement amount proportionately to her degree of fault. Option A. Denying the claim entirely would violate fair claims practices. Option B. Paying the full claim without resolving liability issues would be improper. Option D. Requesting the claimant to withdraw the claim is not appropriate and may violate consumer protection laws. Question 7. Topic: Insurance contracts. Which of the following is not considered a valid element of an enforceable insurance contract under South Dakota law? A. Offer and acceptance. B. Consideration. C. Competent parties. D. Marketing strategy. Answer: D. Marketing strategy. Explanation: a valid insurance contract must contain the following essential elements: offer and acceptance, consideration, and competent parties. These are required under contract law principles adopted in South Dakota. Marketing strategy is irrelevant to the enforceability of a contract. Option A. Offer and acceptance are required to form a contract. Option B. Consideration refers to the exchange of value, e.g., premiums for coverage. Option C. Competent parties must have the legal capacity to enter into the contract. Question 8. Topic: Insurance financial regulation. In South Dakota, what is the primary purpose of risk-based capital (RBC) requirements for insurers? A. To ensure that insurers can offer competitive premium rates. B. To guarantee that all claims are paid within 30 days. C. To assess the insurer's financial stability and prevent insolvency. D. To regulate the commissions paid to insurance producers. Answer: C. To assess the insurer's financial stability and prevent insolvency. Explanation: risk-based capital (RBC) requirements are used to measure an insurer's financial solvency based on the risk of its investments, underwriting, and other operations. These requirements help regulators ensure that insurers maintain enough capital to meet their obligations, minimizing the risk of insolvency. Option A or B. C does not relate to premium rates. Option B. There is no guarantee that all claims are paid within specific time frame under OBC requirements. Option D. OBC does not regulate producer commissions. Question 9. Topic: Insurance market practices. Which of the following actions would constitute rebating, which is prohibited under South Dakota law? A. Offering a client-free educational materials about insurance policies. B. Providing a client with a $50 gift card for purchasing a policy. C. Offering a discount to a group based on professional affiliation. D. Providing a premium discount authorized by the insurer. Answer: B. Providing a client with a $50 gift card for purchasing a policy. Explanation: rebating is the act of offering an inducement not specified in the policy to encourage a client to buy insurance. Under SDCAS 583317, this practice is prohibited. Providing gift card constitutes an illegal rebate. Option A. Offering free educational materials is not considered rebating. Option C. Group discounts are legal if approved by the insurer. Option D. Authorized premium discounts are legitimate. Question 10. Topic: Insurance laws and regulations under South Dakota law. Which of the following must be included in a producer's license application? A. Proof of college degree in finance or insurance. B. Background check and fingerprint submission. C. Letter of recommendation from an insurer. D. Sworn affidavit of good moral character. Answer: B. A background check and fingerprint submission. Explanation: South Dakota law requires insurance producer applicants to undergo a background check and submit fingerprints as part of the licensing process, as outlined in SDS 583052. Option A. College degree is not mandatory. Option C. Letters of recommendation are not licensing requirement. Option D. Sworn affidavit is not required for licensing. Question 11. Topic: Insurance laws and regulations. Which of the following statements about licensing requirements for insurance producers in South Dakota is correct? A. An individual must complete at least 50 hours of pre-licensing education to apply for a license. B. A producer must renew their license every year on January 1st. C. Producers must complete continuing education requirements to maintain their license. D. Licenses automatically renew without any action from the producer. Answer: C. Producers must complete continuing education requirements to maintain their license. Explanation: under South Dakota law SDCAS 5830115, insurance producers must complete continuing education C requirements to maintain their license. The state requires producers to complete 24 hours of C every 2 years, including 3 hours of ethics training. Licenses do not renew automatically, and failing to complete C requirements can result in license suspension. Option A. South Dakota does not require a fixed number of pre-licensing hours, though applicants must pass the licensing exam. Option B. Licenses renew every 2 years, not annually. Option D. License renewal requires action from the producer. Question 12. Topic: Insurance financial regulation. What is the primary role of the South Dakota Division of Insurance in regulating insurers' financial practices? A. To set insurance premium rates for all insurers in the state. B. To ensure that insurers remain solvent and can pay claims. C. To provide financial advice to policyholders. D. To approve all insurance policies sold in South Dakota. Answer: B. To ensure that insurers remain solvent and can pay claims. Explanation: the South Dakota Division of Insurance oversees the financial stability of insurers to ensure they can meet their obligations to policyholders. Insurers are required to submit annual financial statements and meet risk-based capital (RBC) requirements to prove their solvency. Option A. Insurers, not the division, set premium rates, though the division reviews them for fairness. Option C. The division does not provide financial advice to individuals. Option D. The division approves policies to ensure compliance, but this is not its primary financial role. Question 13, scenario-based question. Topic: Claims handling. Mr. Anderson files a homeowner's insurance claim after severe storm damages his roof. The insurer's adjuster inspects the property and finds that some of the damage existed before the storm. According to South Dakota's fair claims practices, how should the adjuster proceed? A. Deny the entire claim due to pre-existing damage. B. Pay the claim in full, including for the pre-existing damage. C. Pay only for the damage caused by the storm and document the pre-existing damage separately. D. Request Mr. Anderson to withdraw the claim to avoid complications. Answer: C. Pay only for the damage caused by the storm and document the pre-existing damage separately. Explanation: Under South Dakota's Fair Claims Practices Regulation SDCAS 583367, insurers must distinguish between covered damage and pre-existing conditions. The adjuster must pay for damage caused by the storm but cannot include repairs for pre-existing issues that are not covered under the policy. Option A. Denying the entire claim would be violation of fair claims practices. Option B. Insurers cannot pay for uncovered damage. Option D. Requesting claimant to withdraw valid claim is unethical. Question 14. Topic: Ethical and professional standards. Which of the following actions would be considered a breach of fiduciary duty by an insurance producer in South Dakota? A. Explaining policy exclusions to a client. B. Recommending a policy with a lower premium but less coverage. C. Failing to remit premium payments to the insurer on time. D. Advising a client to file a claim they are unsure about. Answer: C. Failing to remit premium payments to the insurer on time. Explanation: A fiduciary duty requires producers to handle clients' funds with care. Failing to remit premiums to the insurer on time can lead to policy cancellation and breaches South Dakota's fiduciary regulations for insurance professionals. Option A. Explaining exclusions is part of producer's duty. Option B. Recommending policies is acceptable if done in the client's best interest. Option D. Advising clients about claims is part of ethical practice. Question 15. Topic: Insurance market practices. Which of the following would be classified as an unfair trade practice under South Dakota insurance law? A. Offering a premium discount approved by the insurer. B. Failing to provide a written reason for a claim denial. C. Using an insurer's official logo on marketing materials. D. Encouraging client to renew their policy early. Answer: B. Failing to provide a written reason for a claim denial. Explanation: Under SDAS 583366, insurers must provide written explanations for claim denials. Failing to do so is considered an unfair claim settlement practice and can result in regulatory action. Question 16. Topic: Insurance products and coverages in South Dakota. Which of the following business insurance policies would typically include business interruption coverage? A. Commercial general liability CGL policy. B. Workers' compensation policy. C. Business owners policy BOP. D. Professional liability policy. Answer: C. Business owners policy BOP. Explanation: A business owner's policy BOP typically includes business interruption coverage, which compensates a business for lost income due to a covered peril. CGL policies and professional liability policies do not include this coverage. Question 17. Topic: Insurance contracts. Which of the following is a valid legal consideration in an insurance contract? A. The policyholder's agreement to file claims. B. The insurer's promise to pay valid claims. C. The policyholder's signature on the application. D. The insurer's agreement to offer investment advice. Answer: B. The insurer's promise to pay valid claims. Explanation: In an insurance contract, consideration refers to the exchange of value. The policyholder pays premiums and the insurer promises to pay covered claims. Question 18. Topic: Insurance claims handling. Under South Dakota law, insurers must respond to claims communications within what time frame? A. 5 days. B. 15 days. C. 30 days. D. 60 days. Answer: B. 15 days. Explanation: South Dakota requires insurers to acknowledge claims communications within 15 days and provide a prompt response to policyholders. This regulation ensures fair claims practices. Question 19. Topic: Emerging trends and issues. Which of the following is a potential regulatory issue related to the use of artificial intelligence (AI) in insurance? A. Lower underwriting costs. B. Faster claims processing. C. Algorithmic bias leading to unfair discrimination. D. Increased transparency in policy pricing. Answer C. Algorithmic bias leading to unfair discrimination. Explanation. One major concern with AI and insurance is algorithmic bias, which can lead to unfair discrimination against certain groups. South Dakota regulators are monitoring how insurers use AI to ensure compliance with anti-discrimination laws. Question 20. Topic: Insurance market practices in South Dakota. Which of the following practices is allowed under insurance advertising regulations? A. Offering a free gift worth $100 for attending a sales presentation. B. Misrepresenting policy benefits to attract customers. C. Using testimonials from paid actors without disclosure. D. Providing accurate comparisons between policies. Answer D. Providing accurate comparisons between policies. Explanation. South Dakota's advertising regulations allow accurate policy comparisons, but prohibit misleading advertising practices such as false testimonials or offering excessive gifts. Question 21. Topic: Ethical and professional standards. An insurance producer in South Dakota has been accused of acting in their own financial interest instead of prioritizing the client's best interest. Which of the following would be considered a violation of ethical duties? A. Recommending a policy that has a higher premium but better coverage. B. Failing to disclose the potential conflict of interest when recommending a policy. C. Accepting a referral fee for sending a client to another agent without informing the client. D. Offering a discount on the policy for early renewal. Answer C. Accepting a referral fee for sending a client to another agent without informing the client. Explanation. Under South Dakota's Code of Ethics SDCS 5830121, insurance professionals must disclose any conflicts of interest. Accepting referral fee without disclosure is considered unethical because it breaches the fiduciary duty to act in the client's best interest. Option A. Recommending better coverage is acceptable if it benefits the client. Option B. Failure to disclose conflict of interest is violation. Option D. Offering discounts is common and ethical practice if disclosed. Question 22. Topic: Insurance financial regulation. Which of the following financial documents is required for an insurer to demonstrate compliance with South Dakota's solvency standards? A. Quarterly statement of financial condition. B. Monthly sales report. C. An annual audited financial statement. D. Copy of the insurer's investment portfolio. Answer C. An annual audited financial statement. Explanation. Under SDCSS 58564, insurers are required to submit an annual audited financial statement to the South Dakota Division of Insurance to demonstrate their solvency and ability to pay claims. This document provides a comprehensive view of the insurer's financial health, including assets, liabilities, and surplus. Option A. Quarterly statements are also required but do not replace the audited annual report. Option B. Sales report does not assess solvency. Option D. While insurers must maintain an investment portfolio, it's not the primary document for solvency. Question 23. Scenario-based question. Topic: Insurance claims handling. Sarah's home insurance policy includes replacement cost endorsement. After fire severely damages her home, Sarah submits claim. The insurer inspects the damage and offers Sarah payout based on the actual cash value (SCV) of the home. Sarah is confused as her policy clearly includes replacement cost endorsement. What should Sarah do? A. Accept the offer as the insurer's valuation is based on SCV. B. Request reconsideration, providing proof of the replacement cost. C. File complaint with the Division of Insurance, claiming the insurer is violating the policy terms. D. Cancel the policy and find another insurer. Answer B. Request a reconsideration, providing proof of the replacement cost. Explanation. Sarah's policy includes replacement cost endorsement, which means the insurer should cover the full cost of replacing her home, not just the depreciated value SCV. She should request reconsideration and provide evidence that the replacement cost is higher than the SCV. Option A. Accepting the SCV offer would violate the terms of her policy. Option C. While Sarah could file complaint, the first step is to resolve the issue directly with the insurer. Option D. Cancelling the policy is unnecessary if the issue can be resolved. Question 24. Topic: Insurance contracts. Which of the following provisions in an insurance policy is most likely to be voided due to being against public policy in South Dakota? A. A clause requiring the insured to pay a deductible. B. A provision excluding coverage for intentional damage caused by the insured. C. A clause that waives the insurer's responsibility to pay claim due to the insured's violation of state laws. D. Provision that limits liability for property damage caused by fire. Answer C. A clause that waives the insurer's responsibility to pay claim due to the insured's violation of state laws. Explanation. Under South Dakota law, provisions that exempt insurers from liability for actions that violate state law are considered against public policy and would likely be voided. An insurer cannot waive responsibility for compliance with laws that protect public interests. Option A. Deductibles are standard and enforceable. Option B. Excluding coverage for intentional acts is permissible. Option D. Limiting liability for fire damage may be enforceable depending on policy terms. Question 25. Topic: Insurance market practices. Which of the following is considered a misleading insurance advertisement under South Dakota law? A. An advertisement that accurately explains the features of a policy with a disclaimer. B. A commercial that states no one can beat our rate without specifying the terms. C. A policyholder testimonial that is supported by facts and full disclosure. D. An email offering a free policy review from an authorized agent. Answer B. A commercial that states no one can beat our rates without specifying the terms. Explanation. Under SDAS 58335, advertising must be truthful and not misleading. Claims like no one can beat our rates without specifying terms or limitations are considered misleading as they could deceive potential customers about the actual conditions. Option A. Accurate explanations with disclaimers are allowed. Option C. Testimonials are acceptable if true and fully disclosed. Option D. Offering free reviews is acceptable if the email complies with disclosure requirements. Question 26. Topic: Insurance products and coverages. Which of the following types of insurance products are commonly used to cover business-related legal costs in South Dakota? A. Professional liability insurance. B. Disability insurance. C. Property insurance. D. Health insurance. Answer A. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers legal costs and claims arising from professional mistakes or negligence, making it essential for businesses in industries such as law, accounting, or consulting. Option B. Disability insurance covers income loss due to illness or injury, not legal costs. Option C. Property insurance covers damage to physical assets, not legal expenses. Option D. Health insurance covers medical expenses, not business-related legal costs. Question 27. Topic: Insurance regulatory environment. The South Dakota Division of Insurance oversees which of the following aspects of the insurance market? A. Setting insurance rates and premiums for all types of policies. B. Regulating the solvency of insurance companies. C. Selling insurance policies directly to consumers. D. Approving claims for all insurance companies in the state. Answer B. Regulating the solvency of insurance companies. Explanation. The South Dakota Division of Insurance is primarily responsible for overseeing the solvency of insurance companies, ensuring they can meet their financial obligations to policyholders. This includes reviewing financial reports, performing audits, and ensuring insurers maintain sufficient reserves. Option A. The division does not set rates for all policies. Option C. Insurance policies are sold by producers, not the division itself. Option D. Claims are handled by insurers, not directly by the division. Question 28. Topic: Insurance claims handling. An insurer in South Dakota is obligated to issue a claim payment for a total loss on a policy. What is the maximum time the insurer has to make the payment? A. 15 days from the date of settlement. B. 30 days from the date of the claim approval. C. 60 days from the date of settlement. D. 90 days from the date of approval. Answer B. 30 days from the date of the claim approval. Explanation. South Dakota requires insurers to make a claim payment within 30 days of claim approval for total loss. SDCSS 583356. Failure to meet this deadline can lead to penalties and interest on the amount owed to the policyholder. Option A. The time frame for payment is 30 days, not 15. Option C. 60 days exceeds the statutory time limit. Option D. 90 days is also beyond the required time limit. Question 29. Topic: Emerging trends and issues. What is A potential regulatory challenge posed by the use of telematics in auto insurance in South Dakota. A. Low premiums for all drivers. B. Privacy concerns related to data collection. C. Improved customer satisfaction due to personalized rates. D. A decrease in fraud detection rates. Answer: B. Privacy concerns related to data collection. Explanation: telematics involves collecting data from vehicle usage, such as driving speed, distance, and behavior, to assess premiums. This raises privacy concerns as insurers must ensure that customer data is secure and used only for legitimate purposes. South Dakota regulations require insurers to comply with state and federal data protection laws and to be transparent about how collect, store, and use this data. SDCSS 583352. Option A. Low premiums may occur but are not regulatory challenge. Option C. Customer satisfaction can increase but is not regulatory issue. Option D. Telematics has been shown to increase fraud detection, not decrease it. Question 30. Topic: Insurance laws and regulations. Which of the following actions would not be allowed under South Dakota's insurance fraud regulations? A. Person making false statement about an incident to increase their insurance payout. B. An agent misrepresenting coverage to sell policy. C. Policyholder providing accurate information about loss. D. Business intentionally failing to disclose material facts about property during the underwriting process. Answer: C. A policyholder providing accurate information about a loss. Explanation: providing accurate information about a claim is not only legal but also required under South Dakota's insurance fraud statute. SDCAS 583324. Fraud is committed when there is misrepresentation or concealment of facts intended to deceive the insurer, which makes options A, B, and D fraud-related violations. Option A. Making false statement for increased payout is insurance fraud. Option B. Misrepresentation by an agent is fraud under SDCS 583326. Option D. Failing to disclose facts during underwriting is violation of disclosure requirements.